This is the rhythm of the Get It Now era. The real-time revolution. Never before have we expected more, faster. Every interaction, every transaction, transformed to give you convenience, choice, and certainty. We all need to meet these demands without ever compromising security and trust. With new levels of transparency, making it easier to move new forms of value. Connecting people and places that haven't been reached before. Harnessing the potential of new technologies. With Swift at your fingertips, you have all the tools you need to transform all types of transaction, creating a seamless digital experience for your customers on a platform with the highest standards of security and resilience. Today and tomorrow. Let's shape the future of finance together.
Hello everyone, and welcome to the show that explores some of the most exciting innovations happening across financial services. I'm Nick Kerigan, Head of Innovation at Swift, and today we're delving into the world of digital assets and how we're turning our attention to real-world applications within our global community. I'm delighted to be joined today by Charifa Otmani, Director of Capital Market Strategy, and Karin, who's working in our product team to discuss this important topic. So to kick us off, could you tell us a bit about your role at Swift? Charifa, if you'd like to start.
Sure. Thank you, Nick, and super excited to be on this live too. Hello to everyone tuning in. So a bit about my role at Swift. I'm part of the strategy team where we're responsible for defining and driving the company's strategic direction. To do so, we look at three dimensions. Of course, the needs of our diverse community of users, the broader market drivers that are shaping the financial landscape, and digital is one of them, and Swift's core mission, which is to help the industry move towards instant, frictionless transactions in a secure, resilient, and interconnected environment. In this remit, my focus is on strategic initiatives in the securities and foreign exchange space, which are two areas where we see a lot of exciting transformation and opportunity in digital.
Great. And Karin?
Hi, Nick, and thank you for the invitation. And hello, everyone. Thank you for joining us here today. I'm Karin de Ridder. I've been in the financial industry, for over 25 years now. I have experience in securities, post-trade processing, also payments and FX. I've had several roles at Swift. I've been in the standards team and now, as Nick said, in the product team, looking at how we can use or reuse standards in order to shape the digital assets space.
Great. Thank you, and a very, very warm welcome to you both on this show. I think we've got two real experts with us to discuss this exciting topic of digital assets today. Before we get into the discussion, as always, it's great to see so many of you joining us on the stream today. For those who are joining live, feel free to ask questions in the flow, and we'll try to answer them as many as possible as we get through the discussion. So let's get going. Global interest in digital assets has skyrocketed in the past few years, with financial institutions across the world exploring their potential. The tokenization of assets and currencies promises to reshape not only the way that value moves, but also how ownership is structured and how settlement takes place. And indeed, Standard Chartered and Synpulse recently estimated that the market size could climb as high as $30 trillion in the next decade. And to realize this potential, the industry is now moving beyond experimentation Recently, for example, the European Investment Bank issued its 5th digital bond for 100 million euros. And a number of large asset managers have also recently issued high-value tokenized investment funds. So, Charifa, things are clearly moving fast in the world of digital assets. What are you seeing in the market?
Thank you, Nick. As you rightly said, we are experiencing a clear and accelerated shift from proof of concepts to production deployment. And I'd like to break down the evolution, this acceleration, into a couple of key trends. And I will start with the fact that digital assets, tokenization of assets, is getting serious traction with the public sector. We've seen a growing number of issuance of digitally native assets. We all have examples in mind. You mentioned EIB in the context of the Eurosystem exploratory work. We are also seeing, as you said, many private initiatives with large asset managers, BlackRock, Fidelity, tokenizing money market funds, for instance. But really what has been crucial lately is that policymakers, regulators, I mentioned the Eurosystem, but we can think of UK, US, Middle East, and certainly Asia. The public sector more broadly has become actively involved. And the public-private collaboration on technology is increasingly aligning with industry's ambitions, with very concrete use cases that are being looked at. And this regulatory clarity is unlocking capital for more investments, hence contributing to the acceleration. Another key trend, and you highlighted it, is the fact that settlement innovation has become an important piece of the journey. With technology comes the opportunity to go further in de-risking transactions by rethinking the settlement workflows, especially in a cross-border context. Initiatives like Project Guardian, led by Monetary Authority of Singapore, demonstrated that the industry can innovate settlement capabilities. And in that Project Guardian specifically, participants could use their existing SWIFT rails to settle digital assets transactions, leveraging fiat liquidity and fiat payment systems. And talking of payment systems, the third trend I'd like to mention is the role of digital forms of money. Digital assets can hardly scale and develop a secondary market without trustworthy regulated cash. Be it fiat or digital, by the way. So we see more and more hybrid models like regulated stable coins backed by bank deposits, such as the EuroCV from Societe Generale Forge, but there are others, of course. And for digital cash, like for digital assets, we are again seeing more alignment between central banks and private players on critical themes like interoperability, governance, standards, risk frameworks, for instance. So these are the three main drivers I will highlight. There are two others I'd like to mention very quickly, if you allow me. They are related to the level of maturity of standards and infrastructures supporting those digital assets. Standards and infrastructures are critical enablers if you look at them, right? If they are well thought through and from the start, they enable the interoperability. But if they are forgotten, they can lead to a fragmented ecosystem, and clearly no one wants that.
Yes, I mean this is clearly a very dynamic space, and as you mentioned, the clear risk of fragmentation is an issue here, because whilst we've seen an upsurge in the number of institutions exploring digital assets, those potential risks are also emerging, and different institutions are looking to use these different types of assets to solve various challenges, employing a wide variety of technologies, standards, and protocols. And then this diversity then can lead to a lack of interoperability of standard and standardization, and that can create fragmented, what we've called digital islands, that can increase costs and risks for participants. So I think this is a key point. So Karin, what do you see as the current challenges related to fragmentation, particularly in digital asset standards, and how's this impacting the industry?
Okay, well, thank you, Nick. And as you said, there are many initiatives in the digital asset space that are currently ongoing, but everybody seems to come up with their own way of doing things, which can prevent interoperability and also global uptake. As you rightly said, standards are essential for ensuring that there is compatibility, consistency across different platforms and different actors. It's actually not any different from what is happening already in the traditional financial world. So I would say that we should, and Charifa alluded to this, we should focus on interoperability by design. And of course, when we talk about interoperability, it can mean a lot of different things, right? And in this particular case, coming from a business perspective, and also during the rest of this conversation, I will be focusing on business standards in particular. Because financial business standards, they enable the creation of multi-party business processes by reducing the ambiguity in the specifications. And also, maybe one last point on this is that there are different players moving at different speed in the digital assets world. So it's important that there is coexistence between the traditional assets and the digital, the tokenized assets. And also because there are so many initiatives, it's also important to ensure that we have interoperability between different platforms so that they can be accessed by as many participants as possible. I think that's going to be the key to success. And that's also where Swift is trying to help to bridge the gap between, on the one hand, the traditional financial world, and on the other hand, the new world, all the digital asset space.
Great. Well, and you mentioned Swift, and we promised in this session that we would talk about Swift's live trials. We've been working with the global community for a number of years to see how we can overcome fragmentation and ensure, as you said, Karin, global interoperability. And last year, we completed one of the largest global collaborations to date on this topic, with 38 financial institutions joining us to work on complex and commercially relevant use cases in a sandbox environment. And so, building on what we've learned through that exercise, we're now working with our community to conduct a series of live trials that involve real digital asset and real digital currencies transactions flowing between institutions orchestrated over the Swift network. So, Charifa, maybe you can give us a bit of an insight onto why we're conducting these trials. What's the goal here?
Sure, Nick. I'm sure you've heard me say it before many times. Swift is a multi-asset platform and network. And for our 12,000 users, it's really their go-to window for everything from payments to securities, FX, and trade. And we want to keep it that way. We want users to be able to build on the investments they've been making over the years in strong identity, strong security, compliance standards like ISO that Karin will cover. So when we talk about the trials we're running, we're starting from that single window. From the channels that banks and corporates and asset managers and market infrastructures and others already use. We capture their digital transactions. We run them through a secured layer that checks integrity, identity, signature, authentication, etc. And we apply trusted workflow orchestration. And then we route those transactions to the right digital ledger for settlement. The ultimate goal of these trials is really to lay the foundation I just described for a Swift multi-ledger digital asset solution. And this Swift multi-ledger digital asset solution is really meant to simplify the connectivity to multiple blockchains for our users, and also to help standardize how digital assets are defined and processed across the ecosystem.
Great. So we're exploring several use cases as part of these live trials. Could you give us a sense of and an overview of those use cases we're tackling?
Yeah, of course. So we are focusing on three main business use cases. And I would add a fourth one, which ties them all together through harmonization and to allow us to define the standards and frameworks needed for digital transactions and digital assets. So in terms of business use cases, the first one is we are looking at tackling post-trade settlement for tokenized assets. It is about enabling that seamless exchange across participants, platforms, and forms of money. And here we are building on the trial led by the ECB, the European Central Bank, where tokenized assets and digital cash were exchanged simultaneously between buying and selling parties. And the role of SWIFT was to provide the technical interoperability necessary to orchestrate those transactions between Banque de France, the L3S platform used for the transfer of tokenized assets, and Ethereum for the digital payments. So really, this live trial is to take this experiment and work towards a scalable solution for a true digital DVP settlement. So that's the first one. The second business case we are exploring is how to reduce the FX settlement risk, especially for those currency pairs that are not eligible to payment versus payment protection. So these transactions are often settling out of sync, which creates counterparty risk, principal risk, as we call it. And with digital assets, digital money, on the rise, we can expect this risk to grow, right? So really, our FX users have banks, brokers, they turn to us and they ask us to leverage our orchestration capabilities to link both payment legs of an FX trade and enable synchronized settlement. The good news is that we've already tested this in 3 settings. So we already tested this idea. We did it in our CBDC sandbox with the 38 banks that you mentioned, Nick, and CLS was involved too to settle cross CBDC FX transactions. Another instance where we tested this idea is the ECB trials with Banque de France and HKMA, where we really executed this PVP settlements of CBDCs. And in BIS Meridian 2, recently with the Bank of England, where it was also about this orchestration capability. So we are now working with 6 major banks to co-design a solution for synchronized fiat and digital FX settlements. And the third business use case is about automating payments on chain. So automating payments for on-chain transactions. So we don't really have a universally accepted digital currency yet. I think that's a fair statement. So most digital asset transactions still settle in fiat. So we want to streamline that process using the SWIFT network. I mentioned the Project Guardian earlier, which is a great example, and we are building on that in our live trial. So together, these 3 business use cases really support this broader goal I mentioned earlier of making digital assets transactions seamless, secure, and standardized across the board.
Great. This is an really exciting space and exciting developments. And obviously, we're now kind of, we're well underway with all of this this work. So what can people expect for the rest of this year?
So the live trials are a big focus for us as part of our digital strategy. And as we discussed earlier, this space is evolving very, very fast. And it is getting complex, more and more complex. As an industry, we need to deal with multiple forms of digital assets. That creates the complexity as well. So we see, for instance, stablecoins gaining traction right now, gaining momentum. So we are running those live trials, keeping in mind that this is about integrating different forms of digital assets into a broader vision. So it's very important for us to design a solution that can support multiple types of digital assets, and that meets the evolving needs of our users. So that's a bit of an example of what's in store for the rest of the year.
Great. And our ultimate vision in this, I think, is to, as you said, to give our users access to multiple regulated digital asset classes, multiple regulated digital currencies, using their connection to the SWIFT network. So how do you see these trials actually supporting us to get us on this journey?
So this trial, we should see them as a continuity of a common journey that we have started with our community as they move deeper into the digital space, and we are building on the trust and investment they've made into SWIFT, as I said. But as the industry is reimagining how assets and transactions are managed, we are also focused on enabling that transformation, that deeper transformation that is being discussed. If you think of initiatives like Global Layer 1 or Canton Network, you can really see that the industry is after more fundamental innovation and change in the way the business has been conducted so far. But that will still require shared, trusted security, identity, resiliency standards, shared business practices and operational standards, shared workflows and schemes, certainly a shared connectivity layer, and potentially a shared ledger. So we have the proven technology and expertise to contribute, which we are doing by collaborating with many of these industry initiatives out there. Yourself, myself, Karin, and others at Swift are engaged at industry level. And with all these efforts put together, we are very well positioned to enable our users move faster towards a digital future.
Great. And it's it is an inspiring digital future, and I share that very much that vision with you, Charifa. You alluded to kind of a fourth use case here, and I guess that kind of fourth use case is how do we tie all of these things together in terms of standards and market practices. So Karin, turning to you, you're working to ensure that we're building common frameworks and standards into these use cases from the ground up. Can you give the audience a bit of an insight of how you're actually doing this in practice?
Yeah, so as you know, Swift was created over 50 years ago as a global and neutral cooperative with the prime goal of achieving interoperability and also to set standards. So as everybody knows, we have set standards for the traditional world, and we will also be helping the industry now to define common standards for more innovative products, such as digital assets, stable coins, etc., as well as I said before, to try to bridge the gap between the traditional world and the new world. Because in our view, there will be not one single platform or ledger, there will be multiple ones. And for example, large financial institutions will likely need to be connected to several ones. So therefore, it will not be possible to scale successfully if everybody produces their own set of specifications. The integration will be just too complex and too risky. So therefore, if we want these technologies to bring value, we will have to find some way of standardization to bring consistency in the digital assets implementation and also to ensure that there is integration with the existing industry infrastructure. So I think this is, in a nutshell, high level, what the role that Swift can play in this context.
Yes, and I mean, obviously, we've been working on standards for many years now. How do we draw on Swift's expertise in standards development to make this happen in digital assets?
Yeah, well, we have a long-standing expertise indeed in standards setting for the existing or the traditional financial industry, but we don't do that in isolation. Actually, we work with a lot with market participants, with industry groups. So as I was speaking about business standards before, we ensure that we adhere to a strict governance process, because only that can ensure that there is consistency and integrity of the standards, but also at the same time allow for evolving business needs. For example, in this particular case, I think it's now time to mention the ISO 22 standards, which I think many of us know as a standard used for cross-border payments or payments by market infrastructures. It's an open standard. So it's an open standard. Everybody from the user community can contribute to the standard. Everybody, when there are changes that are needed, everybody can join the working group and have a say in whether or not the business case is valid, whether or not it makes sense to make these changes. So it's important that Swift works with the industry and Swift works with as many industry participants as possible in order to make it a useful standard for everyone. Now, there's one point, Nick, I would like to clarify, because we often hear, as you know, that there is a perception, I call it a perception, that ISO 282, that the governance process is slow. But I have to disagree. There are two ways of looking at this, actually. So on the one hand, we can make changes rather quickly because there's even what we call in technical terms, a fast-track maintenance process. And also, when we speak to a certain community of users and they have specific changes that they need for their community, we can build something very fast that can be used by that community. On the other hand, it's also true to say that when you build a prototype in isolation, you can go fast, but industry transformation, look at the migration towards ISO 20022 for payments. Industry transformation takes time, and the slowness or the perceived slowness of the standards process is actually a side effect of the industry consensus that we need to build a standard that is useful to a lot of industry players.
Yes, and absolutely. I mean, we as Swift, we rarely do things on our own, right? We're always involving that community of 11,500 banks, corporates, and PSPs in that process. And so, as you rightly say, Karin, we are absolutely about moving an industry forward. And we know that obviously that, as you said, standards development, it doesn't happen overnight, but maybe how do you expect kind of this initiative that we're driving to accelerate the process of standards development for digital assets?
So we're obviously, as Charifa already alluded to that as well, we're working on multiple initiatives at the same time, many proof of concepts. They all have a standards angle to them. Maybe one particular one I would like to call out at this time is that we're working on a proof of value whereby we are defining a reference platform that will allow for the publication of standardized definitions for tokenized bonds through a modular approach. We're starting with bonds, but the idea is to also be able to expand this to other asset classes later on. It's actually sort of a marketplace where reference implementations for tokens can be published and consumed from there. So how are we going to do this? We're actually working again with the industry because we're first of all defining a shared taxonomy, so a shared business standards for how to define the terms and conditions of a bond, basically. Mm-hmm. So in order to do that, we're working together with an industry group, ICMA, the International Capital Markets Association, because they already have a bond taxonomy. We're collaborating with them because, of course, we want to put this in ISO 20022 and start using ISO 20022 for the definition of digital bonds. So that's one thing. In addition, as I said, it will be a modular approach. So we're also trying to establish common functions on top of the taxonomy for particular life cycle functions that a bond can have. For example, it can pay an interest or it will be redeemed at the end. So we're also trying to standardize those functions. And last but not least, with function and lifecycle management also comes roles and responsibilities. So who can do what in that process? So for example, the issuer can issue, the paying agent can pay an interest, etc. So that's what we're working on at the moment. It's ongoing, so it's a collaborative exercise. It's a very exciting project. More work is needed, obviously, so we expect to have more news on this by the time that Cybos happens in September this year.
Yes, so definitely watch this space at Cybos for end September. And this is a really, I think, really vital and important standardization initiative. Thank you both for your comments. I'm conscious of time, but I can see that we actually have a large number of great questions for the audience. So I'm going to now turn to those questions and just take a few of them. There's a particular standards question Karin, that I'm going to ask you to cover, which is from Khaled. Thank you, Khaled, for your question. And it basically is the question about how have we formalized the 500 series messages, the securities messages for digital assets. And I know that's been work that's been over for the last couple of years, right?
Yeah, indeed, that's a very technical question to begin with. So, indeed, the 5 series, for the people who might not know, are traditional securities messages. We have, for example, messages to settle securities transactions. And indeed, we have enhanced, we started already a few years ago to enhance them because we wanted to be future proof, and we already started to enhance those messages for digital assets. So we included data elements that allow you to identify the blockchain address, the wallet address, also importantly to actually identify the token itself, for which we are using an existing ISO standard called the Digital Token Identifier. We are also using other standards like the Legal Entity Identifier to identify parties, etc. So indeed, our traditional securities messages have been enhanced to also cater for typical blockchain requirements. And this comes back to the point that I was alluding to earlier. It's actually our way of bridging the gap between the traditional financial world and moving on to the newer digital assets space.
Thank you, Karin. And so, Khaled, those securities messages. They are already digital assets are ready. So, thank you for your question. Charifa, I'm going to turn to you now for a kind of a bigger picture question, and it comes from Parsa. Thank you, Parsa, for your question. The question is, what are the primary risks associated with integrating digital assets into the traditional financial systems, and how can those risks be mitigated?
So it's a very important question. Risk management is highly important for our industry. I think what is interesting to start with is all the risk frameworks that we are already operating under, right? So there are a number of things that exist today in the traditional space, and it goes the same for standards. Everything that the industry has been investing into in terms of efficiency gains, coming together, collaborate on common norms and common standards, including for the risk management. I will start from there. What I see is coming back to this idea of fragmentation is that we need to have integration between the traditional and the digital space. It's super important from a liquidity perspective so that you don't have dispersed liquidity, that you don't need to start searching for your assets or not having this clarity, this visibility on how are things going on both the traditional and the digital. So really creating that bridge between the two worlds, making sure that the level of excellence that we manage as an industry to reach on the traditional side is also replicated for the digital side, and that both are coming together as making one business for the participants to operate with. So that's super important, and clearly risk management is a big piece into it.
Great. And maybe just a follow on, which Varun was asking, which kind of relates to this. Varun's asking, do you see an eventual convergence of digital and fiat? And do you see this kind of then gaining mainstream traction with both financial institutions and central banks?
Yeah. So typically, indeed, that goes back to this trend that we've seen in terms of public and private sector collaborating more closely and coming together and making sure that it's not just about innovation, it's also responsible innovation, regulated innovation in a way that works in a risk-free framework, and that is developing in a risk-free framework from an industry perspective. What is important as well is to keep in mind the fact that digital is addressing specific issues, challenges, long-standing challenges that the industry has been dealing with, like liquidity I mentioned, transparency, making sure that you optimize your assets, that you get to something that is instant 24/7. So these are all open questions that we had on the traditional side that we tried in the past several times to solve, and that digital allows us to crack. thanks to the technology, thanks to the specificities of digital assets, thanks to the use of smart contracts and other types of tools that the digital brings to us. So clearly there is, for me, a space for traditional and a space for digital. They are addressing and bringing different challenges and different benefits as well. So there is this complementarity that will come together even more as the regulators, as the public sector is enabling it now, understanding it better, contributing to developing the use cases with the industry, and enabling it ultimately through a safe and risk-free framework from a legislative perspective.
Great. Great. Thank you very much, both for your answers. We are slightly over time, but I'm going to bend the rules slightly and actually myself answer one of the questions, which comes from Srinivas. And thank you, Srinivas, for the question. And Srinivas asks, is the digitization of trade finance part of the current use cases? So just to let you know, we have parallel innovation initiatives working very actively on trade digitization. You may have seen some of the announcements that we made last year, and we're now actually in the process of having trade platforms joining SWIFT. So we're going to be talking about that in due course. But yes, we are actively working on the digitization of trade, Srinivas. And you may have seen an announcement last week from the European Central Bank about innovation partnerships with the digital euro. And SWIFT is proud to be part of a group which we named the DigiTrade group, which is working in innovation partnership with as part of that those ECB work. And you can find out more about that innovation partnership on our LinkedIn post. So please do check that out if you're interested in trade. With that, I think that's pretty much all we've got time for today. So thank you so much, Charifa and Karin, for joining me for this excellent discussion, for sharing your insights. For everybody who joined us, thank you so much. To find out more about how we're working with our community to unlock the potential of digital assets, you can read our latest white paper, which is a call to action for the industry around standards, and we'll share the link to that in the notes. For now, that is it for today. Thank you all for joining the show.
Thank you.
Thank you.